Today, in our discussion, we will look at one of the very important indicator or one of the important concept which decides the volatility in the Indian market. We are going to study more about India VIX. India VIX is a volatility indicator. It reflects the volatility for the next 30 days in the market. And if you look broadly, India VIX and Nifty 50 benchmark are inversely correlated. If India VIX is increasing, your Nifty 50 will be declining, will be losing its strength, right? So these two are inversely correlated. And this concept of India VIX was introduced by NSE in the year 2008. So in this discussion, let's deep dive what to do, how to navigate that, and what are the previous experiences, what are the charts which has shown couple of years before. Because please understand, in stock market, history repeats in one or the other form. Just that we need to be prepared, right? If you are prepared and you know what is the extent of risk you are taking, you can have a very peaceful journey. You did not worry about the uncertainty in the market once you are prepared. So today we will be deep diving on that, right? On various case studies, on various examples also we will be studying. So without any further ado, let me share my screen and let's discuss about the India VIX, right? The study of India VIX. Let's deep dive into India VIX, which is India Volatility Index, right? India Volatility Index. Now, first thing, yes, this is a vital indicator of market volatility, right? It gives you the momentum of the market either on the upward journey or on the downward journey or on the sideways journey for the next 30 days, right? For the next 30 days. And this is also called as fear index, right? It is generally referred as fear index. What is the fear in the market? Is this a conducive market? Is there something we need to be more cautious, right? So this is a very vital indicator, like how you load your stock in the trading view, or how you load a sector like Nifty IT, Nifty FMCG in a trading view. You can load indicator also, right? You can load India VIX also similarly, right? You can load India VIX also similarly. We will discuss with a lot of practical examples on this. And India VIX was introduced by National Stock Exchange in the year 2008 to give the investors, to give the traders the short-term volatility in the market, right? To give a view about short-term volatility for the next 30 days. And both of these, when you look at India VIX or Nifty 50, they are inversely correlated, which means if India VIX is increasing, then your Nifty 50 will be declining. That's called as inverse correlation, right? That's called as inverse correlation. And you have a high VIX, which means market uncertainty, and there is a potential declines in the stock market, right? Like right now, the India VIX is above 18. The reason we are discussing this now, right? In the last trading session, India VIX has moved above 18, right? That's a reflection of high VIX. So when the market is uncertain at the potential decline in stock prices, generally we have VIX at a higher levels, 18, 20 and above levels. And if it is a low VIX, it is a stable market, right? Markets are more stable and we have reduced fear, right? We have reduced fear. And let's look at certain example wise, right? Example wise. If India VIX is at 16, which means it is expected to change by 16% over the next 30 days, right? It is expected to change by 16% over the next 30 days. And if you look at the different levels of VIX, right? If you look at different levels of VIX, so couple of months before, right? Before March 2024 or even April 2024, we used to be at a levels of around 14 levels. And even January 2024, we are at almost 10 to levels of India VIX also, right? So whenever India VIX is below 18, it's a conducive market. Between 16 to 18, 16 to 18, we have to be a little bit cautious. 18 and above, yes, that's the place where we need to be very, very cautious, because that means there is more instability in the market and there is a potential decline in the stock prices, because India VIX and Nifty 50 are inversely correlated. And anything above 20 will lead in further volatility. So what we will do, these things, let's learn using TradingView, right? Let's learn how to spot them, or what is the past, right? How it has moved in the past. Okay, so now let me load two charts, right? In the layout, let me load two charts. And yes, if you see my screen, the first screen is your Nifty 50 index, right? The first screen is your Nifty 50 index. And what we will do, let me go to COVID levels, right? Let me go to COVID levels. Even first, on a single screen, let me load India VIX, right? So how do? You just go to the symbol search, you just click on India VIX, right? So this is how you load volatility index. Right now, if you see, the volatility index India VIX is increasing, and right now we are at 18.2, right? Anything above 18 or anything above 20 is like more instability, more volatile market. And let's go back in the history, right? Let's go back in the history. Like if you see here, during COVID levels, right? During COVID pandemic, COVID-19, we have seen a rapid spike in the VIX levels, and we have seen a similar decline in the stock prices of Nifty 50 also. Now what we will do, let's compare India VIX with respect to Nifty 50 movement. So I'll be going to the layout option here, and I'll keep two charts on a single screen, right? So this is India VIX during COVID levels, right? Yeah, this is India VIX during COVID levels on your left hand side during February 2020, March, right? Up to April, right? Up to 30th March, we have India VIX levels here. And from 30th March, 7th April, we have seen a decline in India VIX, right? So this is the zone where we have seen an increase in VIX. This is the zone we have seen a decrease in VIX. Now let's see what exactly happened during the same period, right? Let's do an apple to apple comparison in terms of time period, right? In terms of time period. If you see here, yes. So here we are at around January, February levels, 2020. And again from here, March, April levels, right? Yeah. So let's observe what happened. Let's observe what happened, right? So first of all, during your 2020, January, February levels, we have seen India VIX increasing, right? The volatility index has increased above 18 levels, right? Above 20 levels. It has even touched a high of around 65 levels. It has touched India VIX. During the same period, right, we have seen Nifty 50 declining, right? Nifty 50 declining. So what did we just study? India VIX and Nifty 50 are inversely correlated, right? Are inversely correlated. And after certain time, India VIX from March 2020, it has started to decline, right? From 67 levels, which it has touched all-time high, right? India VIX. It has started to decline When this has started to decline, India VIX, as it is inversely correlated, Nifty 50 started to move up. Right? Nifty 50 started to move up. So yes, as a smart and an intelligent investor, it's important to keep these things in our purview and check certain factors, right? Check certain factors. And now, some interesting part. Right now, sir, right now the Nifty 50 is correcting, or majority of the stocks are correcting. What could be the probable reason for it, right? What could be the probable reason for it? One, yes, generally, before the election period, we see this kind of a market volatility, right? Until June 4th, until the election results are out, we may see this volatility, and post that, we can see some good movement, right? One, on the general elections related. Two, India VIX moving above 18. That could be one probable reason. Three, FII wise, we are seeing some exits. FII money is going out of the Indian market, and there is a reason for it. Until and unless they do not know whether the government is a stable government or not. FII is not bothered about whether NDA government is coming, Congress government is coming, some XYZ government is coming. They are not bothered of it. All they wanted is they wanted a stable government, right? They wanted to have a clear picture. So after the results, right, then they know the stability. Then they may aggressively add, right? Then they may aggressively add. So right now, because of this pre-election related, India VIX is inching up. So we have to be a little bit cautious in our short-term positions. We do not overtrade. If any position we are entering, we enter selectively. Only stronger companies we enter selectively. And what did I say? Stock market history will repeat in one or the other form. Now what we will do, let's go back to the past, right? So right now we are in 2024. Let's look at what happened in 2019. Let's look at what happened in 2014 during the election period, right? If you look at the charts during 2019, right? Before the elections, yes, India VIX has slowly increased. We have seen market correcting. After the election results are out, VIX has started decreasing, and market also reacted positively. Similarly, 2014, go back to the charts, right? Before the election, India VIX started to increase, right? We have seen market little unstable. And 2014 results out, when VIX started to decrease, markets also have moved up, right? So we do not know whether the same two instances will repeat or not, but chances are high it can repeat, because India as a country, on the macroeconomic front, we are very strong. Whoever do not track the data, go back and check. Last month, April 2024, we had the highest collection of GST, right? We have crossed the benchmark of 2 lakh crores. Purchasing Manufacturing Index, we are at highest in the last couple of years, right? The number of UPI transactions, very high, right? Automobile industry has declared very good numbers for the month of April, and that's the reason even yesterday, if you see, right, 9th May 2024, right, we have seen a very good move in majority of the automobile or even OEM related companies, right? Original equipment manufacturers, the automobiles have done well. So macro wise, we are very strong, and quarterly earnings also was not too excellent, was not too bad. It's a mixed kind of a results, and a GST collections of 2 lakh crores when it has touched that benchmark, or when it has touched that levels, which means companies are doing well, right? Companies are doing well. So they can be positive on the Indian market, and let's see how the market moves post elections, right? How the market moves post elections, right? So when you look at India VIX, right? When you look at India VIX post 2024, let's see whether we will be seeing a decline from these levels. We will see, right? So if you go back to 2019 levels, right? If you go back to 2019 levels, right? Yeah. So this is your 2019 levels, right? Where we have seen an increase in VIX, and the same period, you go back and look what happened in Nifty 50 wise, right? What happened Nifty 50? And we have again seen a decline in VIX, right? 2019. Go back to 2014, right? Go back to 2014. So 2014 wise, yes, we have seen a increase in India VIX. Parallelly, look what happened in Nifty 50, right? And we have again seen a decline in India VIX, where it is inversely correlated. We see a momentum in the Indian Nifty 50 to move up, right? To move up. So history will repeat in one or the other form. So we need to take clues, and the same logic, right? The same working applies in your stocks also, right? Applies in your stocks also. So whoever are worried, sir, my portfolio is declining, until and unless your stop losses are triggered, until and unless your exit is triggered as per your system, do not worry. And right now, I would not call it as a strong downtrend in the market. We are still in a good market, just that the markets are under pressure, right? Just that the markets are under pressure. We need some more positive clues, and we need some more things which can move the market from the present levels. One, India VIX need to be cooled down. Second, FII money should be coming in more, right? Even in this month of May 2024, in the last 10 days, if you see, almost to the tune of 30,000 crores, right, has been moved out of the market, right? So the inflows which are coming from DII, domestic institutional investors, are not matching to the tune of FII outflow, right? Once this stops, we can see a very good movement, right? So India VIX, which is the indication for the market volatility, is very good to track, and it is very, very important to understand and know what exactly it stands for, right? If you have loved this discussion and what is your key takeaway from this session, let me know below, right? If you have loved this discussion, give me a love below. Thank you.